Welcome to mortgage amortization. So this is amortization schedule explained. If you look on the address bar right there, it says click20.com, and that's where you should go right now. So I like this schedule because it has a lot of tools that we're going to need. Let's take an example. We borrowed a mortgage of $300,000. We paid, this is 20%, which is $60,000, 20% of home price. So for example, if we pay less than 20%, this is what's going to happen. Let's say we pay 5%. 5% down would be $15,000, and the loan amount would be $285. But what happens there is you can see what the computer does, or what this mortgage calculator does. It's going to show you that you are going to pay something called PMI, which as you can read here, lenders typically require private mortgage insurance when your down payment is under 20%, loan to value is greater than 80%. And that's where you see right there, loan to value is 90% of the loan. Your down payment is 5%, which is $15,000 at closing. So this is not enough, but if obviously you don't have enough money to pay for down payment, this is sufficient to get you into the door. And after that, I'm going to show you how you can get your home paid off faster, regardless of how much money you put down. So this loan is for 30 years. The loan term is 30 years, and interest is 6.5. If we go down to, let's say our mortgage starts in June 2026. If you come back over here, the breakdown of your mortgage will be, let's go down here. Your payment is going to be 1801.39. Total interest, you're going to pay $360,000, which is 128% of loan amount. So you can see here, you borrowed $300,000. Actually, no, you paid 15,000 down, so your loan actually is 285. But at the end of the day, when you finish paying your mortgage, you will give the bank $363. This is insane. Total amount that you're going to pay is $648, and your payoff date is May 2056, which is 360 months from today. Now, when you look at your monthly payments, which a lot of people, that's all they focus on, I can afford my monthly payment, but they don't actually look into seeing exactly where that money goes. Your mortgage payments is broken down into two buckets. The first one is principal paid, which your very first principal paid will be $257.64. Your very first interest payment will be $1543.75, and your remaining balance will be 284, 742 and 36 cents. If you look over here, your monthly payment will be broken down to, your monthly payment will be 1801.39, and that is where it's going to be broken down to principal paid and interest paid. If we come to the graph right here, it shows the red side is how much interest you're going to pay, and you can see that this graph is front loaded, meaning the bank is going to collect most of their interest first before they credit you. So it's kind of lopsided, where the first couple months, the first years is going to be more paying towards the interest, and slowly, gradually, you're going to start getting more credit going to your mortgage. And so your 30-year mortgage ends up almost paying, actually not almost, as we can see here in our example, you're going to pay more than what you borrowed. So my job is to help homeowners to understand first, to master this amortization, and to understand how they can use this tool. Go to click2zero.com and you will be able to follow through and see how you can take action today and start putting yourself in a position where you're going to save hundreds of thousands of dollars. And part of this tool right here, if we look over, there is this tab called extra payments. Extra payment, if you click on it, it's gonna drop down to this little area here, and it's broken down where you can make your monthly extra payments, your yearly extra payments, or you can do one-time extra payment whenever you're able to. So in the next video, we're going to hyper focus on this area and kind of see how you can position yourself into paying off your mortgage faster. Lastly, I want to introduce this tab right here called Amortization Schedule. And this is going to show you the breakdown of all your payments for the first time before you expand it. It's just going to show you your first 12 months payments, your first year. But if you want to see the whole picture, or you can kind of skip, you can go year by year. But if you want to see your whole payment breakdown for your 360 payments, you can click on the show all, and then it's going to show you from year 1. You can scroll back to year 2, year 3, year 4, all the way to your last year. Which is year 30. Our goal is to pay off your mortgage before year 10. Before year 10, I want to make sure that we get our home paid. Our home paid off. So, if you follow the bank's schedule, by year 10, you will have accumulative principal paid is $31,000, and you will have paid the banks $132,000. With my plan, you're going to have this loan paid before year 10, and you're going to pay the banks less than $100,000. And if that's the case, if you look over here, currently you're supposed to pay 306, but if you pay less than 100,000, you're going to save at least $200,000. And that is what we're going to learn. So subscribe below, make a comment if you have any questions. We're going to have this series. I'm going to post video every day, and we're going to explore how you can get this loan paid as fast as possible. Click the link below. I'm going to post the link for this calculator so that you can actually play with it. And it's a free calculator, so you'll be able to play with it and kind of see how you can maximize your potential, because right now you are wasting a lot of money not knowing what to do with your mortgage. Please subscribe, like, and comment below. If you have any questions, just comment below. Thank you.